Hello everyone and welcome back to the CMA final indirect taxes input tax credit question solving video. So in our question bank version 4.0 which is already shared on the Telegram channel, we have a total of 51 questions in the question bank. Out of 51 questions, first 30 questions are solved in one video which is available on YouTube in the question answer playlist. Then starting from question number 40 till 51, the remaining 12 questions are solved in another video, part 2 of ITC question solving video, which is also there in the Q&A playlist, the same playlist that we are referring for this particular video. Now what we are left with is question number 31 till question number 39. 9 questions. Once you complete all the 3 videos, you are done with every single question of input tax credit that have been asked in past examination, revision test paper, mock test paper, ICAISM. These 51 questions cover everything, a compilation of every single question. So what we've done is everything, the computation, the compulsory question number 1 that comes up in examination, mock test paper, revision text paper, ICAI study material, even illustrations as well as test your knowledge questions, everything I have uploaded on YouTube. So we are just left with the 9 questions, part 3 of the ITC video that we are completing today. Let us start with question number 31. This question bank that I am referring to is already shared on the Telegram channel. The link of Telegram channel is in the description of this video only. Chalo, excuse my handwriting today because of this. Question 31. Adityanath Private Limited is registered under GST in the state of Uttar Pradesh. It is engaged in supplying 3 products Alpha, Beta, Gamma from its factory located in Rampur, Uttar Pradesh. Product Alpha and Beta are taxable whereas Gamma is exempt. So first of all, what we know is the person that we are dealing with is Adityanath Private Limited, a body corporate, okay, registered in the state of Uttar Pradesh. Dealing in 3 products, Alpha and Beta, which are taxable, and Gamma is exempt. Okay. We also supply some cigarettes from the factory located in Kanpur, and we also own a petrol pump in Lucknow. Also engaged in supply of certain services. So we have taxable goods, exempt goods, cigarettes, then petrol as well as services. We are dealing in all these things. Furnish the following information with respect to the month of August. What they are asking is compute gross liability only on the outward supplies for the month of August, which means no provisions relating to ITC. Only on the outward supplies, sales that we have made, we need to calculate the outward GST payable, that too for the month of August. I have already mentioned this in the previous video also, that always make sure which month we are calculating the liability, because it could be possible that some supply is given in the question, the time of supply is not falling in this particular month, then you do not have to consider it while calculating the liabilities. We will only take the supplies whose time of supply is coming in the particular month for which we are computing the liabilities. Okay, always assume in this question the rate of goods as 12%, rate of services as 18%. Ignore CGST, SGST, IGST for the sake of simplicity. So we directly have to take the total GST and need not bifurcate C, S or I, which means the tension to determine place of supply is over, because be it interstate, intrastate, we are simply charging total GST here for the computation purpose. This is revision test paper May 22. Chal. Let us start. So we only need to calculate the outward liability payable. Supply of product Alpha. Now they've already said that Alpha and Beta are taxable whereas Gamma is exempt, and all the goods rate is 12%. So simply Alpha is taxable, so 50 lakh into 12%, we will take 6 lakh. Then we say Gamma is exempt. If it is exempt, then no outward GST payable. Then management consultancy services. For any services rate, they've mentioned 18%. So we'll take 50 lakh into 18%, 9 lakh. Renting of commercial complex to local traders of electronic goods. Now, residential dwelling for residential purpose is exempt under GST, but commercial renting is a normal service taxable under forward charge mechanism. So, on 50 lakh again, we will take 18% GST. So, it will be 9 lakh. After that, export of product Beta. Now, exports particularly are 0 rated, even though Beta is taxable, but it is exported. And if the question is silent about whether it is export with payment or without payment, we always normally assume it to be without payment only. Particularly if the question says it is with payment, then only we consider it as with payment. Now, because this is export of product Beta being 0 rated without payment of tax, liability is going to be nil. After that, export of consultancy services, including exports made to Nepal-based company of rupees 5 lakh, payment received in INR. Now, from Nepal, Government of India has allowed us to receive INR. Now, whenever we are exporting services, we need to receive the currency. We need to receive the consideration in the forex convertible currency. But particularly for Nepal, government has given us this exception that even if you are supplying services there and you are not receiving forex but you are receiving INR, that is okay, and we will still consider it as export only. So this export of consultancy services again will be a zero rated supply, and therefore no GST will be applicable. After that, sale of building. Now, sale of land and building is always considered as a negative list supply. Negative list, not a supply under GST Schedule 3. We have studied FB changes. Schedule 3, we have studied FB changes, where S means sale of land and building. So, no outward GST here. Then interest received on investment in fixed deposit. Again, interest received from loan deposit advance is also exempt under GST. So this is also going to be exempt and no GST tax chargeable on the same. Then sale of shares of a public company. Again, shares being securities. Securities are neither goods nor services. Therefore, no GST, exempt here also. Supply of cigarettes, GST being levied at 28%. Now we know if you are supplying cigarettes and they are saying that this 1 crore amount which is given is inclusive of 12,50,000 excise duty. Now tell me, while calculating your outward liability, are you going to consider this excise or not? The answer is yes. We have studied section 15(2)(a). We have studied section 15(2)(a). What is section 15(2)(a)? It is inclusions under GST, where the first inclusion was, if at all there is any other tax, duty, says anything payable, it will all form part of a value of supply. So even if excise is being charged, and this is inclusive of excise, no need to reduce the excise amount, GST will be charged on excise also. So on entire 1 crore, 28%, which means 28 lakh GST will be charged. Correct. After that, supply of petrol, diesel, again, it is falling under high speed diesel, motor spirit, natural gas, aviation turbine fuel, petroleum crude, not taxable under GST. Currently, from a future date, government is going to recommend and notify. Therefore, today, no GST chargeable on the same. And amount received from Durga Das Private Limited of Lucknow, Uttar Pradesh. It has sponsored the business exhibition organized in Delhi by Adityanath Private Limited. Now, we have received the sponsorship amount. We have received the amount, which means we are suppliers. We are suppliers, and who is the recipient of sponsorship service? The recipient of sponsorship service is Durga Das Private Limited. Now, tell me, whenever the recipient of sponsorship service is either body corporate or partnership firm, we call it to be taxable under reverse charge mechanism, which means the recipient here, Durga Das Private Limited, is going to pay tax under RCM. Therefore, no liability for me. Liability for Durga Das is going to arise. So here I will say, because this is taxable under reverse charge mechanism, therefore no liability on the same. So the total liability comes as 52 lakh, which is 28 and 9. 6 and 9, 28, 9, 9 and 6. Other than that, everything is, this is exempt, zero rated, schedule 3, no GST, etc. So this was a fairly simple question. No provisions of input tax credit, only and only simply outward liability they had asked. Okay. Moving on to question 32, which says, in the above question, all other things remaining same, compute the net GST payable from the electronic cash ledger if additional information is given to us. Which means the question that we solved before question 32, the question that we solved before question 32, 31 is also needed to solve question 32. So basically, all the outward supply details are given in 31, and they told us to calculate the gross liability. Now question 32, they are saying that all remains the same. This outward liability is payable. Yes, all the facts remain same. Now plus we have all these other things also. We have all these inward supplies also, and now you calculate the final GST payable. Okay. So now one thing we need to understand here, because in this question, when we were solving question 31, we saw there are exempt supplies also, taxable supplies also, which means rule 42 for apportionment will come, because now we have common input services and we will have to apportion. Now to apportion, we need E and F, which is exempt turnover and total turnover. So first of all, let us calculate E and F from question 31. Chalo, I'm just not able to write only because of this. How are we going to manage? Let us see. Chalo. E and F. E is exempt turnover and F is total turnover. First of all, supply of product alpha. It is taxable, so 50 lakh will come in total, not in exempt because taxable. Then gamma is exempt, right? Gamma is exempt, so 1 crore will come here also and 1 crore will come here also. Done. After that, management consultancy services. Again, because it is taxable, it will only come in F, not in E. After that, we say renting of this is also again taxable. So 50 as it is comes here. Then zero rated supplies. Zero rated supplies are not exempt supplies, no reversals for the same. So again, this zero rated supply will also only come in taxable, not in exempt. After that, consultancy services again zero rated. Then after that, sale of land and building. Tell me, sale of land and building for the reversal purpose under rule 42. We always have to take it as stamp duty value. Your actual sales is 2 crore 50 lakh, but we need to take the stamp duty value. What is the stamp duty value? Sale of building excluding stamp duty of 2.5 lakh being 2% of value adapted for paying stamp duty. So they are saying 2.5 lakh is 2% of the stamp duty. Then what will be my total stamp duty? So I will simply do 2.5 lakh divided by 2%. It comes to 125. So 125 is the stamp duty value. Okay. So we'll take the building at the stamp duty value, excluding stamp duty of 2.5 lakh. Yes. So 125. 125 will form part of E also. 125 will form part of F also. Then after that we say interest received. Now interest received is normally exempt, but for the purpose of rule 42, 43 we understand this, that for reversal purpose interest is not considered as exempt even though it is actually exempt. So it will only form part of my total turnover. This is 10,50,000. So 10,50,000. Okay. Then after that, sale of shares. Now for sale of shares, we take 1% of the sale value. You ignore the purchase price. 1% of the sale value will form part of E also and F also, which means 250 into 1%. Excuse my handwriting. Then again we will say 250 into 1%. This will form part of E also and F also. After that, supply of cigarettes. Now do you remember we had studied a particular note. In your handwritten notes, you open rule 42, 43, there we have written this line, that any other tax, any other earlier regime taxes like excise or VAT if paid, it is considered as a part of value of supply. You have to pay GST on the same. But while calculating your turnovers for the reversal purpose, you are not going to include these excise and VAT. Do you remember, or you want me to show it in the notes? Chalo. I'll just quickly show you in the notes. Come to version 4, input tax credit chapter. See. Here we come to input tax credit C. This particular provision where we are understanding how to calculate E and F. E and F will not include any earlier taxes like VAT, excise and service tax, even though you have to pay GST. But while calculating your turnover for the reversal purpose, this E and F you are going to ignore, which means 1 crore is my sale of supply of cigarettes, out of which 12.5 lakh is excise. So I will remove 12.5 lakh from 1 crore. So this will come under. Now cigarettes are taxable, so of course they will not come under exempt, they will only come under taxable supply. So here what I will do is plus simply 1 crore minus 12.5. Okay. After that, supply of petrol and diesel including VAT of 5 lakh and excise of 12.5. Now on petrol, diesel, no GST is chargeable. So they will form part of E also and they will form part of F also. So simply 80 lakh minus 5 minus 12.5. So 80 minus 12.5 and minus 5. Here also plus 80. I will just simply write the figure. 80 minus 12.5 minus 5, which comes as 62.5. So we'll just directly write here 62.5 and 62.5. Okay. Then after that, amount received from Durgadas Private Limited. Now RCM, any supply on which your recipient is going to pay tax under reverse charge mechanism is also considered as exempt only for the reversal purpose. So 6 lakh will form part of E also and 6 lakh will form part of F also. This is how we calculate E and F. Let us just quickly do a total and match with the suggested given. So 100 plus 125 plus 2.5 plus 62.5 plus 6. So the exempt turnover comes as 296. Then we go to total turnover, which is 50 plus 100 plus 50 plus 50 plus 100, 20, 125, 10.5, 2.5, then plus 100 minus 12.5 plus 62.5 and plus 6. This comes as 664. So let us check 296 and 664. Chal. So here E by F. So exempt turnover is 296 lakh, correct? And the total turnover is 664 lakh. So we got E and we got F. Now we simply have to calculate the ITC, the common credit, and common credit multiply by E by F. We will also get the reversal. So one major task of the question to calculate E and F so you get the reversal amount correct is done. So E is 2960 and F is 6640. Chalo. Now let us start solving the adjustments given one by one. So consideration paid, question 32, consideration paid for repair of machinery used for manufacturing product Alpha by George Incorporation of USA. Now see, understand, repair of machine is a performance based services. Now recipient, we are getting the machine repaired, we are in India, but the person repairing the machine, George, is outside India, he is of USA, which means if recipient in India, supplier outside India, we have to apply section 13 to determine place of supply for services. Now section 13 simply says that the place where the performance is performed, that only becomes the place of supply. Now supplier is in USA, and because the repair is done in USA only, the place of supply is also going to be USA. Now supplier also outside India, place of supply also outside India, which means we cannot charge GST on this transaction. This is not happening only in the taxable territory, so no GST on the same. After that, life insurance paid by the company as per policy, as not as per legal obligation. See, if you pay any policy as per legal stat obligation, then ITC is available. This is under company policy, which is blocked under 17(5). Therefore, no ITC for the same. After that, audit fees paid 6,50,000. Now on audit fees paid, yes, 18% ITC I will get. So simply calculation of this is no GST, no GST. Now here ITC. Audit fee 6,50,000 into 18%, 1,17,000 ITC available. And also remember, this is going to be the common credit because audit is done for all the kinds of supplies that we are doing, which includes taxable, exempt, non-taxable, everything. So this is again a part of common credit. After that, raw material purchased, including raw material of 1,50,000 imported from China. Basic custom duty of 15,000, SWS and IGST already paid on this imported material. So understand, 10 lakh is the total purchase, out of which we will reduce 1.5 lakh because that is import on which we have already paid the GST, which means we will simply take the credit of that amount. We are not going to pay it again under RCM because it is already paid at the time of importation. So directly 29970, which is already paid, we will take ITC of the same, and then out of 10 lakh minus 1.5 lakh raw material, what is remaining? 8.5 lakh. On this 8.5 lakh domestic purchase, 18% ITC will be available. Sorry, this is goods, not services. Therefore, 12% ITC will be available. Do not forget that in this question, goods is 12% and services 18%, which means 8.5 lakh into 12% plus 29970. This amount of ITC I will get. Let us just cross verify. So 10 lakh minus 1.5 lakh multiply by 12% plus 29970. It comes to 131970. Have we taken credit of 131970? The answer is yes. Chalo. After that, transportation charges paid for transportation of the goods. 4 lakh is paid to GTA registered in Uttar Pradesh and 1 lakh is paid for the transport of goods by horse pulled carts. GTA has not opted for forward charge mechanism. If GTA has not opted for forward charge mechanism, we as registered recipient will have to pay RCM. But do you remember that RCM is applicable only and only in case of goods transport agency GTA. In case of horse pulled carts, it is exempt under GST. Individual truck owner, temp owner, bullock cart, horse carts, we have studied this in charge chapter also and in exemption chapter also, that this is all exempt under GST. So out of 5 lakh, 1 lakh is exempt. only on 4 lakh, I have to pay 5% RCM and I will also get credit of this 5%. So 4 lakh into 5%. 4 lakh into 5% is 20,000. I got ITC and 20,000 I also have to pay under reverse charge mechanism. So this I also have to pay under reverse charge mechanism. Got it? So this is 4 lakh into 5%, 20,000 you just write, you have to pay this under reverse charge mechanism. Got it? After that, telephone expense paid, again this is for the factory and official use only, so ITC available, again this is a common credit. So 4,25,000 into 18% ITC we can simply take. Bank charges paid current account, again relating to business only, so 2 lakh 18% ITC we will take. Legal services from an advocate. Now legal services from an advocate, we understand, see, preceding financial year turnover, they have given 40 crore, which is of course greater than the registration limit, which means if you have taken services of advocate and being a business entity or preceding financial year turnover is greater than registration limit, then RCM will be applicable. So again we will say that on this 3,50,000, 18% ITC I have to pay and also 18% RCM will be available to me. But this is only and only in relation to product beta, and product beta is fully taxable. Therefore, this will not be a part of common credit. No Rule 42 reversal required on the same. This full ITC you will get because it is particularly related to taxable product only. So this 3,50,000 into 18% full ITC I will get and full RCM I have to pay. Other than that, all these credits are common credits which are used for all types of taxable, non-taxable and exempt supplies. So we will simply do a total of all the credits. We simply make a total of all the common credits, which is 3,81,470. Now multiply by, we already calculated E, we already calculated F. You got this reversal amount. So simply you reduce this reversal from the total ITC, you get the eligible ITC. And plus you will do 63,000, which is 350 into 18%, because this you will get full. This ITC you will get full. Therefore, no reversal to be applied. After reversal, whatever amount is left, you will add the total ITC on the same. So now we got the amount of outward payable from the previous question 31, because this question is in continuation to that. Then we will reduce the ITC that we calculated, and in that we will have to add the 2 RCM, legal services and GTA service RCM, that we compulsorily have to pay via cash only. And now this is the final amount that has to be paid using your cash ledger. This was a very superb comprehensive question. We normally do not expect such big questions to come up in examination, but yeah, for practice point of view, this question, if 31 and 32 you do together, your rule E by F concepts are clear and they've covered everything. They've covered land and building, they've covered sale of shares, securities, they've covered exempt supplies, RCM supplies, export, zero rated, everything they have covered. Also that point of earlier taxes not to be included while calculating reversal turnover. Then they've taken common credit, they've taken RCM, they've taken exclusively taxable credit. So these two questions combined cover a lot of concepts. But of course, we don't expect this type of question to come up in examination this big, because it consumes a lot of time. Done. Chalo. Moving on to next question number 33. Now this is not a new question. I do not remember the question number, but yes, in one of the previous questions only in the previous video, we've already completed this question 33. On the figures and names were different there. This is a similar kind of question only. So I'll just quickly give you an overview and we will proceed further. Question 33, Moto Power Private Limited, registered under GST, is engaged in the manufacture of a 5-seater luxury car at its factory located in Rajasthan, Uttar Pradesh and Gujarat. So we have place of business at Rajasthan, Uttar Pradesh and Gujarat. Company has taken registration in each of these states. We also enter into contracts to provide these cars on rent to corporate clients, wherein cost of fuel is also included in the value of supply. Company has given this following data with respect to Gujarat factory only. Above amounts are exclusive of all kinds of taxes wherever applicable. However, applicable taxes have also been paid by the company. Further, the following additional details are given with respect to the payments and receipts reported. By what do you want us to calculate? They've also given us the opening balance of ITC, which will be used for set off. After that, we are saying, chalo, compute the GST payable by cash ledger. So basically they need the net liability to be calculated. Outward minus ITC plus RCM, net payable via cash. That is what we have to calculate. You assume the rate of all inward and outward supplies at 18% only. Only for renting of motor vehicle, cost included in the fuel, the rate is 5%. Okay. It is important to note that credit of input tax charged on goods and services used in supplying the service of transport of passengers by any motor vehicle designed to carry passengers from the is not available except the credit of input service in the same line of business. We already know this point. We have already studied this point that renting of motor vehicle ITC is blocked. But if you are in the same business giving outward supplies, then ITC is available to you. The necessary conditions for availing ITC have been compiled with the Motor Power Private Limited wherever applicable. This is revision test paper November 22. Chal, let us solve this question aram se. First of all, we'll have to read the details given and apply it on the data that is there in the table. So raw material worth 0.5 lakh purchased from a registered supplier. What is the total raw material? First of all, total raw material is 4.5 lakh. Now out of this 4.5 lakh, they are saying that 0.5 lakh is purchased from a registered supplier located in Gujarat, were destroyed due to fire in the factory and could not be used in the manufacturing process. Any goods lost, destroyed, stolen, written off, given as free sample, we say ITC is blocked. So no ITC on this 0.5. Remaining raw material has been procured from various vendors located in Maharashtra. Now, this data is given with respect to Gujarat, right? The liability to be calculated is with respect to Gujarat. Correct. That is what they've said in the question. Yes. I am forgetting where I read this Gujarat. Yes, the company reports are given for Gujarat factory. So, if you are purchasing from Maharashtra, I will say that on the 4 lakh, 18% IGST will be available to me. Let us see. Chalo. Opening balances we know. Yes. Then on the 4 lakh, 18% IGST. So 4 lakh into 18% comes as 72,000 ITC available. No ITC on 50,000 because those goods are lost, destroyed, stolen or written off. Correct. After that, next point, rent has been paid for the factory located in Gujarat to its owner registered in Gujarat. Okay, so rent is paid in Gujarat only, which means C plus SGST. So on this 1 lakh, 9% and 9%, 9,000 C plus SGST. Factory also in Gujarat, owner also in Gujarat, C plus SGST will be charged. After that, payment for security services provided by way of supply of security personnel for the tax period has been made to Safe and Secure Solutions Private Limited company located in Gujarat and not registered under Gujarat. It is a body corporate. See, if you are availing security services from any person other than body corporate being a registered person, then you have to pay tax under reverse charge mechanism. But here these security services 0.7 lakh, which means 70,000, are taken from a company. Company means a body corporate, which means no reverse charge provisions will apply. Plus, this company is not registered under GST. If they are not registered, RCM also apply. They cannot collect GST also, which means on security services, no GST will required to be paid. Why no GST, ma'am? See, understand. If the supplier would have been any person other than body corporate, we would have paid under reverse charge mechanism. Because they are body corporate, reverse charge mechanism does not apply. Normal forward charge mechanism applies. But under forward charge, they will only collect if they are registered. If they are unregistered, how can they collect under forward charge also? So, seeing this, we understand that no GST can be applicable here. Got it. After that, next point. General insurance services have been availed from Dividend Insurance Company again in Gujarat. So, this insurance we've taken from Gujarat only. So, 2.5 lakh into 9%, CSGST. So, 2.5 lakh, 9%, C and SGST we will take ITC. After that, works contract services availed from Chitra Builders, Gujarat have been used by the company for construction of a foundation on which machinery is to be mounted permanently. Now understand, ITC on construction and works contract is blocked. If you are getting any immovable property being constructed, but if you are getting a plant or machine constructed, then ITC is available. Now here we are building a foundation on which machine will be mounted. In FR, in accounts also we have studied this provision that if you are building any foundation relating to plant, it is capitalized along with the plant only. It is a part of plant only. Now if this foundation is a part of plant and machinery, then ITC on the same. will be available. So this works contract services 1.6 lakh. Again, we've taken the services from a person in Gujarat only, which means C plus SGST will be charged here. So again, we will see on works contract services C plus SGST 9% will come. Why ITC available, ma'am? Normally construction is blocked for immovable properties, but for plant machine ITC is available. And if you're getting any foundation being built which is particularly for that plant machine only, it is capitalized along with that plant machine only, which means ITC will be available for the same. After that, next point, audit fees is paid to a firm of chartered accountant, Messrs. Pandya and Associates, registered in West Bengal with an aggregate turnover of 30 crore in the preceding financial year for conducting stat audit of the company in the preceding financial year. The firm raises an e-invoice without IRN for the said services. Tell me, is an e-invoice valid without an invoice registration number? The answer is no. If there is no IRN, the document is not valid as an invoice, and if you do not have a valid invoice, you cannot take ITC according to section 16(2), which means on this audit fees that I have paid, I cannot take ITC. Chalo, audit fees ITC nil. Why? Because we are not having a proper document or invoice, taking backing of which we can take the ITC. After that, next point, bank charges towards various services availed by the company during month with regards to its current account maintained in Money Bank registered in Gujarat only. Bank issued a consolidated tax invoice for all such services at the end of the month containing details of tax charge. No problem. We have taken services from a bank is in Gujarat only, which means on this bank charges of 10,000 C and S GST ITC 900 will be available to us. After that, Automobile Association is registered in the state of Gujarat. So we've paid some membership of Automobile Association. Again, it is with respect to business only, Automobile Association, because we are in the business of automobile. So on this membership also, 9% C and SGST ITC will be available. So have we missed on any information? Audit fees, this. Yes, consumables. No data with respect to consumables is given, or we have missed it. They have not given any data with respect to consumables. 1,50,000 consumables. See, raw material, rent, security, general insurance, works contract, they've given audit fees, they've given bank charges, they've given automobile association, they've given then breakup of sales, car rental, services provided to Gujarat government. Okay, let's just keep reading. Maybe we'll find the data with respect to consumables. Chalo. Then they are saying breakup of sales is as under: sales in Gujarat 14 lakh, which means C plus SGST I will charge. Sales in state other than Gujarat, IGST I will charge. Letter of undertaking, this is a zero rated supply. Zero rated supply, which means no GST to be charged here. So on my outward supply, on my intrastate supply, C plus SGST, interstate supply, IGST, on exports, no GST. Got it. After that, car rental income pertains to renting of cars to Jamas Private Limited. Now see, understand, first of all, renting of motor vehicle, cost of fuel included in consideration. Rate if 5%. Supplier not a body corporate and recipient body corporate. If all three conditions fulfilled, then reverse charge mechanism applies. Otherwise, forward charge mechanism. Now here the supplier itself is a body corporate. If supplier is a body corporate, then forget about all other things. This will not come under reverse charge mechanism. And on renting of motor vehicle, we will say forward charge mechanism will apply. So the car rental income, what is the car rental income given here? 0.5 lakh. So the car rental income 0.5 lakh, we will say forward charge mechanism is going to apply. And we have provided to a person registered in Gujarat only, which means again C plus SGST on the car rental income here. C plus SGST forward charge mechanism 2.5% and 2.5% will come. Then they are saying further, consumables. Okay, we got the data for consumables. Purchased from registered suppliers located in Gujarat include diesel, excise and VAT paid worth 0.75 lakh used for running the cars, so rented out to Jamas Private Limited. Assume that except diesel, no other input services are used in providing car rental services. So out of the total consumables of 1.5 lakh, out of total consumables of 1.5 lakh, there is a diesel worth 0.75 lakh, and we know on diesel no GST is applicable. So 1.5 minus 0.75, only on the remaining 75,000 would be some other consumables that we have used here. So on this 75,000, C plus SGST ITC we can take. Yes, now the entire ITC table is over. Consumables data is given here with the sales data, which says that 75,000 is petrol and diesel, etc., on which GST is not chargeable. If GST is not chargeable, you cannot take ITC. But on remaining 75,000, we are going to take C plus SGST ITC because it is from Gujarat only. Understood. After that, services provided to Gujarat government administration are under a health training program. 51% expenditure is paid by government. In exemption chapter, we have studied that if at least 75 or more percentage of the expenditure is borne by government for any training program, then it is exempt under GST. Here it is only 51%, which means this 2.5 lakh. This 2.5 lakh is again going to be taxable and forward charge mechanism. So on 2.5 lakh, C plus SGST payable. If the expense borne by government is at least 75 or more, then we say it is exempt from GST. Here, because expense borne by government is only 51%, therefore this cannot be exempt. So now we know the total GST payable, we know the total input tax credit available. After setting off, we get the amount that we are going to pay via the electronic cash ledger. Got it. Then question 34. Supermarket is a proprietary firm and a GST registered supplier in Ahmedabad, Gujarat. The details of supplies, purchases and expenses for the month of December are given. Where are we registered? We are registered in Gujarat and the details of expenses are for the month of December. What are we supposed to calculate? We are supposed to calculate ITC that will be credited to the credit ledger, common ITC for apportionment, and ITC that will be attributed to the exempt supplies out of the common ITC. Okay, you are required to examine whether Rule 86B will be applicable here or not. However, there is no need to explain the entire exceptions and everything. You just have to see whether Rule 86B will be applicable or not. Now, where is Rule 86B applicable? In any situation where for a month the taxable turnover made by a registered person greater than 50 lakh, in that case we say Rule 86B is applicable. In such situation, you can maximum utilize 99% of your outward payable from your credit ledger, 1% compulsorily you have to pay from your cash ledger. This was the provision. Hope we all remember it. Yes. Chal. I will not explain you the entire provision, of course. You can go to the handwritten notes, open Rule 86B in the chapter of input tax credit. You will find out that if the taxable turnover, excluding exempt, and here particularly only one situation, we even exclude zero rated supplies. So pure domestic taxable turnover, if it is exceeding 50 lakh rupees, in that case, maximum 99% of your outward payable only you can set off from your credit. Even if you have excess credit, still you cannot utilize it, and 1% compulsorily you will have to pay via cash. There are some exceptions to it which the question is saying to ignore, which means if Rule 86B is applicable, we will make it applicable. See, the outward supplies 45 plus 15 exclude the exempt supply. The taxable outward supply intra plus inter is greater than 50 lakh rupees. Yes, which means Rule 86B will be applicable here. If Rule 86B will be applicable, of the outward payable, maximum 99% we can pay from credit. Okay. They are saying all amounts given are exclusive of taxes wherever applicable on inward outward supplies are made to and from registered person only. Again, Gujarat, inward supplies of 50 lakh were used only for taxable and exempt were used for exempt. So basically they are saying that these inward supplies are used for taxable only and this exempt is used for exempt only. So do not consider them for the common credit apportionment. These things which are given are common credit, but this are particularly attributable to taxable only, this particularly attributable to exempt only. So that problem is solved. So this ITC is particular. Other than that, everything is common ITC, which we are going to apportion according to Rule 42, Rule 43. Yes. So first of all, intra-state outward payable 45 lakh, rate of GST 18% given, and if for a GTA we have to pay RCM, there the rate is 5%. Okay. No opening balance of credit, no opening balance of cash ledger or in credit ledger subject to information given. Assume that everything other is okay, and we need to calculate the answer. Chalo. So first of all, we'll see the ITC which will go to the electronic credit ledger. Okay. So we have 40 lakh purchases, 10 lakh purchases. This is intra, this is inter. For intra, I will take 9 plus 9%. For inter, I will take 18% credit here. So 40 lakh into 9 plus 9 and 10 lakh into 18%. This ITC I will avail. Correct. Whatever is my exempt supply, I will ignore because whatever is attributable to exempt supply, no ITC is available because no tax is only payable there. After that, freight paid to GTA for intra-state transportation of goods, 20% was for towards goods not liable to GST. Now see, understand, the total freight is 60,000. out of which they are saying 20% of the freight is to transport the goods which are not liable to GST. So 60,000 into 20 percentage, it comes to 12,000. So the remaining 48,000 of GTA's freight charges are to transport the taxable items. Now we know whether you transport taxable items, non-taxable items, exempt items, that is a different story. You are taking GTA service for freight. That's a separate transaction, and sending goods is a separate transaction. So I will say if I have availed GTA services worth 60,000, I will have to pay RCM on entire 60,000. But while availing credit, I can only avail credit for the services which are attributable to taxable supplies. I cannot avail services for this 12,000 because this is not attributable to taxable supplies. This is attributable to exempt supply. So ITC of this 12,000 will not be available to me, but ITC of this 40,000 is going to be available to me. So I have to pay RCM on 60,000. But credit I can only avail on 40,000. Similar type of questions we've already done in the previous part videos. Part 1, there was this question of all-in-one general store. If I'm not wrong, all-in-one general store. There also we have already studied this particular concept. So I will say inward supplies exempt from GST, again no. Then we'll say freight paid to GTA for intra-state taxable supplies. Now see, only on 80,000 we can avail ITC. This is the calculation of ITC. They are asking only about ITC. If they would have asked us to calculate the entire outward payable, then we know that RCM we will pay on entire 60,000, but ITC we can only take on the 48,000. Understood everyone? Yes ma'am. See. Done. Chal. After that, next is telephone expense. Out of the above, 18,000 was spent on landline installed in the sales outlet. 12,000 was spent on phones provided to employees in relation to work. Again, landline and mobile phone, everything is in relation to work only. So ITC of entire 30,000 into 9 plus 9 percentage will be available. So 30,000 into 9 plus 9 percentage ITC available. After that, premium paid on insurance for car used by proprietor. Now we know ITC on car is blocked as well as ITC on insurance, service, repair, maintenance is also blocked. We have studied this point. That is the motor vehicle blocked? Yes. Then the insurance, service, repair, maintenance pertaining to motor vehicle is also blocked according to section 17.5. So no ITC available for the same. Outdoor catering services for Diwali celebration, ITC is blocked according to section 17.5. Monthly rent for the premises of sales outlet. Monthly rent, this is a common credit. Yes, we understand, because in the same premises we are selling taxable as well as exempted items. But first of all, we will take entire credit of the common things. So 60,000 into 9 plus 9 percentage, I will take credit. 60,000 into 9 plus 9 percentage, I will take credit. This is the ITC credited to my electronic credit ledger. The total ITC which is credited to my electronic credit ledger. But out of this freight is particularly only for taxable. These inputs are also only for taxable. So what is common? Only telephone and monthly rent. Only two things are common credit, which is telephone and monthly rent. The credit on telephone is 2,700 and on monthly rent it is 5,400. So 2,700 plus 5,400 comes to 8,100. So the common credit for apportionment is only 8,100 because GTA is only for taxable. The GTA which was for non-taxable anyways, we did not take ITC of the same. And these things, the question particularly has only mentioned that these purchases are for taxable supplies only. So here point number 1, what ITC I will credit to my electronic credit ledger? This amount. Out of this, what is common credit? This amount. Now they are asking us to calculate what is going to be the ITC attributable to exempt supplies out of this common credit. Now for that we will have to calculate exempt turnover and total turnover. Now see here, outward supplies are only this much only, correct? Other than this everything is purchases. So my total turnover is 45 plus 15 plus 6. So 66 is my F, total turnover. And out of this, what is exempt turnover? 6 lakh. Only 6 lakh is my exempt turnover. So what I will simply do, 8100 into 6 upon 66. This was the simplest question to calculate E and F because no other adjustment. Straight away, question has given us the data about this is exempt, this is taxable. So I will do 8100 multiply by exempt upon total and the reversal comes as 736. Got it. Then according to rule 86B, what is my outward payable? Here see, understand. My outward payable is my outward payable is 45 lakh into 9 plus 9 percentage and 15 lakh into 18 percentage. This is what I have to pay. Now I can only utilize 99 percentage of it. What I will do is, see, 45 into 9, 45 into 9 and 15 into 18 into 99 percentage. This is the maximum credit that I can utilize. What is the credit available with me? See, I took 369,300. There is no opening balance of ITC. So whatever ITC I took is for current month only. So I will say 369,300, 369,300 and 1,800. I have this much credit available with me. Correct. But what maximum I can utilize? See, understand. You do not have to take 99% of the credit. You have to take 99% of the outward payable. So I will say my outward payable is 4,009. My outward payable here was 45 lakh into 9%. So it was 405,000. But out of this, I can only utilize my credit to pay 99%. So I will do into 99% and it comes to 4,00950. This is what maximum I can pay using credit. How much credit is there available with me? 369,300 minus 736, that was reversal. This amount is less than this only. This amount is less than 4,00350, which means I can utilize my entire credit. This full ITC I can utilize. This full ITC I can utilize. Why you can utilize full ITC? Did you understand? Because 99% you do not have to take off credit. You have to take off the outward payable. So outward payable here is 4 lakh. If I take 4 lakh into 99%, only this amount I can pay using my credit. And credit is already less than that only. So I can use my full credit. Rule 86B as such makes an impact where credit is more. Credit is more than payable, but you still cannot utilize it because it gets restricted up to 99% of the outward payable. I hope this makes sense to everyone and the question is absolutely clear. Chal. Let us move forward to next question number 35. Messer MS Limited is a GST registered company. During the month of October 23, company has undertaken following transactions and they want you to work out the GST output liability, admissible input tax credit, amount that they have to pay in the cash. Basically, they're asking us to calculate everything. ITC, outward payable, payable by cash, everything. To the government, before taking you as a manager in the company, there is no carry forward amount in respect of any items to be considered for the purpose of calculation. So no opening balances whatsoever. Whatever they have given is the only data. Then rate of IGST taken as 18, C and S9 for all the goods and services except GTA. Now we know that on GTA, if RCM, the rate is going to be 5%. All the amounts indicated are without including GST. So basically all the amounts are exclusive amounts. Whether a supply attracts IGST, CGST is to be determined by you only. So we have to determine place of supply. Then we will understand whether it is C, S or I. Company has indicated to you that the GST liability for October 2023 for their main product alone is 54 lakh of CGST and SGST and 72 lakh of IGST. And the eligible credit on the inputs and input service for October 23 is 1.45 crore IGST, 20 lakh each CGST, HGST, which can be straight away taken for the calculation. Other than that, there is some more information which you need to consider. So basically, without doing any calculation, they are saying that 54 lakh CS and 72 lakh IGST is payable. We've already calculated that. So this is payable only. So 54, 54 and 72 is payable. We are telling you, you take it. And in front of that, we have 1.45 crore IGST, 20 lakh and 20 lakh C and SGST, ITC. That also you straight away take. So we will straight away, while calculating the ITC, take 145, 20 and 20 because question is saying. Okay. Now further details they have given, which we have to incorporate and calculate the GST liability. During the month of October 23, the company offered a special discount of 25% on the product, the sale of which is intended to discontinue from 1st December 23 onwards. Issued credit notes to the dealers. Product was lying in the stock with the dealers. See, most important, product was lying in the stock with the dealers and discount offered was borne by company by issuing credit note. And later on, the company, the amount reimbursed to the dealers for discount given to the customers was 36 lakh in course of interstate supply. Now section 15(3). Post supply discount. This is a discount which was not prior agreed. This discount was not prior agreed because we suddenly decided that we want to discontinue this product. Therefore, we thought of giving discount so that we can just sell the remaining products. Now, this kind of discount was not prior agreed. post supply discount, in order to get reduced from value of supply, has to satisfy three conditions. It should be prior agreed, linked to invoice, and proportionate ITC should be reversed by the recipient. Here this discount was not prior agreed, and therefore no impact on the value of supply, no adjustment to be done. Basically whatever was reported earlier is true only. You cannot reduce this discount amount now from the value of supply because it does not satisfy the conditions of section 15(3). It is a post supply discount, not pre-agreed, therefore you cannot reduce it from the value. The company sold a van used for personal transport by auction. Now see, first of all, what mistake students do here is by reading the word personal, they think that ma'am, for personal things ITC not available, this is all a game. No. See, understand, a company, what is personal for a company? Basically the term personal here means that company is using this van to do the transportation of the products of the company. Personal transportation. Let us say I am a company who is selling calculators. If I am having a van, I am using it to make deliveries of this calculator, my that personal purpose they are talking about. Because what is personal for a company? Even personal for a company is business only. So we say the company sold a van used for personal transport by auction. The van had been purchased at 3,20,000. Depreciated value at the time of sale was 140. No GST credit was taken and the van was sold for an amount of 1,50,000 during the month of October. Now see here, in answer they have directly taken 1,50,000, right? Because what happened in this month, we have sold a van for 1,50,000. 1,50,000 being transaction value, we straight away take 1,50,000 as the value of supply. However, there is an alternative answer also possible to this. In the chapter of value of supply, we have studied rule 32.5. We've studied rule 32.5, which was talking about dealing in second-hand goods. And there particularly we had read this point that if while purchasing a vehicle, you have not availed ITC, which the question is saying, while purchasing a motor vehicle, if you have not availed ITC, what you can do is your selling price minus depreciated value. My selling price is 1,50,000 minus depreciated value of 1,40,000. Only 10,000 can also be taken as value of supply. That is also an optional procedure available with us according to rule 32.5. See, in the suggested answer of ICI, they straight away took 1,50,000 because this was the sale value, right? However, afterwards, when the suggested was published in a footnote, they mentioned this point particularly that yes, if a student is applying rule 32.5 and he is taking value of supply only as 10,000, which is sale value minus depreciated value, because that is the provision available. That is also correct. Both answers are correct in this particular case because we have a particular optional rule which you can anyways apply. As of now, we are considering 1,50,000 being the sale value. Even if you have taken 150 minus 140, 10, that is also correct. I repeat again, this amount is given just to confuse you. After that, okay, so first point, no adjustment to be done. Second point, on 1,50,000, on 1,50,000, 9%, 9% we have calculated outward liability because we have sold the van. After that, the company has a policy of raising invoices separately towards transportation cost of their products on the dealers at the time of invoicing sold to them. Company is collecting GST at 5% on all transactions. The transportation cost is collected as a percentage of the value of the goods supplied irrespective of the distance involved. The amount collected during the month of October towards transportation is 6 lakh in intrastate basis and 4 lakh in interstate basis. Now see, understand, even though the individual rate on transportation is 5%, still we know if transportation charges are collected along with the original supply only, it becomes a composite supply, and because all the products of this particular company are taxable at the rate of 18%, it automatically means that transportation being a composite supply, being secondary to the principal supply of goods, will also be chargeable at the rate of 18%. So 6 lakh intrastate and 4 lakh interstate. 6 lakh intrastate and 4 lakh interstate, I will charge GST at the rate of 18% only. Why? Because this becomes a composite supply. Supply of goods, services, supply of goods and transport service is a composite supply because transportation cost as such is charged on flat basis only on all the customers. It is there with the original principal supply. Therefore, taxable at the original supply, taxable at the original rate of the principal supply. Then the security establishment of the company caught an employee who had stolen bearings of 2.5 lakh during the month of October. Bearing could not be recovered, but company recovered the cost from the employee and GST credit 45,000 was taken. See, Goods lost, destroyed, stolen, written off, given as free samples, disposed away. ITC is blocked only. Let us say my warehouse caught a fire and all the goods were destroyed. Even though after later I received some insurance compensation, that is all a separate story. These goods destroyed, no, you have to reverse ITC for the same. Similarly here, an employee stole some goods from the company on which ITC of 45,000 was taken. Now this 45,000 ITC you have to reverse. Even though you recover the cost from the employee later on, that's a separate story. Today when the goods are lost, stolen, written off, given as free sample, disposed of, whatever it is, you have to reverse this credit of 45,000. So see here. Where is it? Yes, I will have to reverse. Where have they done the calculation? Here, yes. So I have reversed this 45,000 of credit from my IGST. Correct. Chalo. After that, company supplies food and beverages to the employees and all items are priced at 10% of the actual cost to the company. Okay, so whatever is the actual cost to the company, only 10% of that is charged to the employees. During the month of October 23, company had charged 50,000 to the employees. Assume it is intra-state transaction. Now understand, if we have charged 50,000 from the employees are related person. Now in case of related person, you cannot straight away take the transaction value, right? Now if you cannot take the transaction value, employees being related person of the company, we will have to apply rule 28. And rule 28 simply says that, what is the open market value? You take that as the value of supply. Now you cannot also take 90% of your further price, because then again your customer has to be unrelated. Here we are purchasing, we are selling to employees and employees are related person. Employees are not selling it further anywhere, which means we have to take open market value only. Employees are not selling it further anywhere. We cannot take 90% of that also. So the only option available with us is to take open market value. What is the open market value? We are charging only 10% to the employees, which means the open market value of this 50,000 would ideally be 5 lakh. Therefore, I am going to charge GST on entire 5 lakh on my employees. Say yes or no. I am going to charge entire 5 lakh on my employees being the value of supply, because I will have to apply rule 28. I cannot simply take transaction value, as employees are my related person. During the month of October, company purchased 10 mobile phones in its name and distributed to the employees to enable them to perform their duties more efficiently. Total price of the phones were 120. At the end of the month, company sold these mobiles to employees and company recovered only 20,000 from the employees. Now again, even if company received only 20,000, what is the open market value here? 1,20,000, which means we will have to charge GST on entire 1,20,000 only. So we are going to charge GST on entire 1,20,000 into 9%. Plus, we would also have claimed normally ITC when we purchase these mobiles. So when I purchased, I took ITC. When I sold to employees for only a value of 20,000, I will still have to take open market value of the same, which is 1,20,000. So ITC also taken because it was for business purpose and because now sold to employees. Here we will take the GST payable on the same also. Got it. The company's registered office is located in a building which belongs to the local municipality and monthly rent is 1.5 lakh. Now in case of municipality, we know renting of immovable property by government to any business entity attracts, not to business entity, to basically to any registered person. Renting of immovable property by government to any registered person attracts reverse charge mechanism, which means this registered person will have to pay RCM on 1.5 lakh and you can also avail ITC of the same. So in outward payable, I will add my reverse charge liability, which is 9 plus 9% of 1,50,000, and I will also take credit of 1,50,000 into 9 plus 9%. RCM you have to pay using cash only compulsorily, and ITC also you can avail. After that, the whole-time director of the company was paid a salary of 5 lakh during the month. Now see, salary is schedule 3, negative list, which means no GST to be chargeable on this 5 lakh. But we also paid 20,000 sitting fees. Now for sitting fees, we particularly know that being a company, we will have to pay tax under reverse charge mechanism. So on this 20,000, we are going to pay tax under reverse charge mechanism and we are also going to avail ITC on the same. So these two things are reverse charge mechanism, rent and director. And here I will also take ITC on these two things, that I have paid under reverse charge mechanism. So this is the total RCM that I have to pay using cash, and I also took credit of the same. Perfect. So now we have completed the entire question as such. This is the outward payable. Yes. This is the total ITC, and this is the total reverse charge mechanism. So from outward payable minus ITC plus RCM, and you get the answer. This is the amount that you have to pay using your cash ledger. We already know the manner of utilization of the set off from the chapter of ITC, which you can apply. I you will use first for I, then for C and S, then you go to C, use it for C, then I, then you go to S, use it for S, and then you go to I. Perfect. Done. Sure. Then moving on to next question number 36. Cash and Credit Limited is registered with GST department in the state of Maharashtra. We are registered in Maharashtra. We have a registered office in Mumbai, engaged in business of production, manufacture, supply of fresh fruits, vegetables, juice and pulp. So this is a very, very, very simple question, I will say, like one of the most simple question. They are asking you to compute the GST output liability, ITC and whatever you have to pay using cash. Basically, they are saying that entire computation question this is. Okay. And this is extremely simple, trust me. Fresh fruits, vegetable, fresh juice and carbonated fruit drinks. Okay, this is the sales that we have made for the month of April. Rate of GST applicable for fruit and vegetable, nil GST, which means fruit and vegetable are exempt. Okay, fresh juices and carbonated drinks are taxable. This at 12% and this at 18%. This at 28%. Okay, so 12 and 28. If we have to do any reversals, we understand that these two things are exempt, will be considered as E, and F is total turnover. So everything will be included in F. Further, for making the supplies of fruit juices, we have also used services of GTA based in Ahmedabad only, and 20 lakh is charged from the GTA. GTA has not opted for FCM. If GTA has not charged any tax in invoices, then we have to pay under reverse charge mechanism. Now, if we have to pay under reverse charge mechanism, we will check whether it is for taxable supply. Then we will also take ITC of the same. If it is for exempt supply, then RCM still we have to pay for transportation, but we cannot take credit of the same. Now here it is for the transportation of fruit juices, and fruit juices are taxable. Fruit juices are taxable, which means on this 20 lakh, 5% I have to pay RCM also, and I will also take ITC on the same. So see, for the GTA services, where is the reverse charge mechanism calculation done? See here. Yes. Reverse charge mechanism, we have to calculate. So 20 into 5%. 20 into 5% comes to 1. So 1 under GTA. We will pay and we will also take ITC of the same. Got it. Chalo, so we've also taken ITC here and we've also considered it under reverse charge mechanism. Right. Now, these are the sales. Okay, these two things are exempt, which means on 2000, 12% and on 200, 28% outward payable, that I will consider, of course. Now, other than that, they are saying these are the amount of purchases and these are the amount of ITCs. So the question mentions the tax amount also. So that calculation also no need to do. Tax amount also is mentioned in the question itself. Fresh fruit for supply, these two things are exempt only, so no GST was charged when we purchased, therefore no ITC. Then after that, fruit pulp purchased for juice, because it is for taxable supply, ITC will be available. Sugar used for fruit juice and carbonated drink, again fruit juice as well as carbonated drink, both things are taxable. Fruit juice and carbonated drinks, both things are taxable, therefore full ITC will be available. Then water for fruit juice, because water is exempt only, no GST paid, then no question of ITC arises. Administrative expenses common. For once, I will take full in my credit ledger. After that, apportionment will be done. Marketing expense, again common ITC I will take. Machinery, again, machine is for fruit drink only. If it is for fruit drink is taxable. So again, full ITC I can take. This is not common. And motor vehicle for of director official use. Now, motor vehicle we know the ITC is blocked only according to section 17(5). So this is blocked. Therefore, you ignore this also. So basically, first of all, what I will do, 20, 26, 6, 12, 2, 2, 10 and 8. This is the total ITC that I will take in my electronic credit ledger, and plus 1 which was pertaining to RCM. So this is the total credit that I will avail in my electronic credit ledger. Now out of this, how much is common? Common is only 2, 2 and 10, right? Common is only 2, 2 and 10. I also have my E upon F. What is my E here? See. Exempt supply is 1100 plus 1100, 2200, and my total supply is 2200 plus 2000 plus 200. So 4400 is my total supply. So 2200 upon 4400. And what is my common credit? 2, 2 and 10. So what we will simply do here, see. So my exempt turnover is 2200 and my total turnover is 4400. And what was my common credit? 10, 2 and 2. So what I will simply do is 10 into 22 upon 44, 2 into 22 upon 44. This I will reverse. Now because this is exactly half only, so the reversal amount and availment amount will come as same to same only. So we will say 28, 28 and 31. This is what we had availed in the credit ledger, out of which 2 into 22 upon 44 is 1. 1 you will reduce, you will reverse, and 10 into 22 upon 44, 5 you will reverse. This ultimately becomes the available ITC for the set off. Now we know the outward payable. Outward payable is simply 1100 into 12% and 1100 into 20. Sorry, this was exempt. So 2000 into 12% and 200 into 28%. Only this much was payable. So 2000 into C plus SGST, 200 into C plus SGST. This is basically the total payable amount, and this is the total ITC available with us. You will simply use the manner of utilization, I for I, then CS, that we all know. After setting off everything, 1 RCM I have to pay mandatorily in cash, and this is my total final amount payable using my cash ledger. Outward minus ITC plus RCM. Outward calculation very simple, only 2 supplies given. ITC calculation we understood, common credit reversal was also very simple here. After reversing you will get the available ITC. So payable minus you set off ITC plus you do RCM that you have to pay in the cash, and you arrive at the final answer. Got it? Then question 37. Mr. Rishi, a registered supplier under GST in the state of Maharashtra, provides the following information for the month of January. So we are registered in the state of Maharashtra. Data is for the month of January. And the question also asks us to calculate the net GST liability for the month of January only and assess whatever cash payment we have to do. Got it? Chalo. Supplied computers which were purchased from an unregistered supplier without any consideration to his brother-in-law in Ranchi. Now see, understand, when we purchased we had not taken ITC, which means schedule 1 para 1. Now and also we have sold without any consideration. If something is without consideration, we always have to check schedule 1. We will check schedule 1. Now schedule 1 para 1 says that permanent transfer business asset on which ITC had been availed. We did not avail ITC because we purchased from unregistered person. Therefore para 1 cannot apply. Then para 2 says supply between related person, distinct person. Now tell me, is brother-in-law a related person? The answer is no. So this is not falling either under para 1, para 2, para 3 is principal agent, para 4 is import. So it will anyways not fall there also. So this is a supply without consideration, not falling under schedule 1, and therefore no GST will be charged on the same. This is not a supply only, basically under GST. Supplied a consignment of 10 laptops to Messrs. NK and Company in the state of Maharashtra at the instruction of third person, being Messrs. ZX Computers of Tamil Nadu. Now tell me, what is the place of supply here? See, we know a consignor directly shipping the goods to consignee. A consignor directly shipping the goods to consignee on the direction of the original buyer third person. The place of original buyer third person becomes the place of supply. We have studied this in section 10 of IGST Act, place of supply chapter. So who is the original buyer? Who is the third person here? The original buyer is ZX, which is in Tamil Nadu, which means place of supply is going to be Tamil Nadu. Supplier in Maharashtra, place of supply Tamil Nadu. IGST will be charged on this entire 6 lakh. So on this 6 lakh, we are going to charge 18% IGST. Now rate and everything is given in the question, that everywhere the rate applicable is 18%, etc. Correct. Chalo. After that, stock counting service to Messrs. XY Impex registered with GST in the state of Gujarat. The place of stock counting was carried out in a godown located in Mumbai. Now see, understand first of all. Stock counting service is not a specified service. Okay. Section 12, we understand a general rule. General rule says that location of registered person becomes place of supply. For unregistered person, if they give address, take that. If they do not give address, then last option available with us is to take the supplier's location as the place of supply. That is the general rule. But we apply general rule when no specific rule is applicable, like immovable property, training services, transportation, services supplied on board a conveyance, telecommunication, advertising. We've seen particular specific supplies for which specific provisions apply. Now, stock counting service is not any specific supply. It is not in relation to immovable property. Understand, stock can be kept anywhere, on road also, in hand also, and you can count it, right? So it is nowhere related to go down. The word go down given here is just to confuse you. This is not a supply relating to go down. This is a supply relating to stock, and stock is a movable property. Correct. Which means immovable property provision will not apply here. So the general provision simply says that what is the location of registered person, that only becomes the place of supply. Now you might think that the recipient is registered in the state of Gujarat, therefore place of supply should be Gujarat, and we are from Maharashtra, which means IGST should apply. Which is incorrect, because understand, if a person is registered in Gujarat having a go down in Mumbai, go down is also a place of business, we know that. Any factory, office, go down, warehouse, any premises from where you carry on your business is your place of business. And if you are registered in one state, having any place of business in another state, you also have to take registration there. Which means if the recipient to whom we are providing stock counting services is having a go down in Mumbai, it will also be registered in Mumbai, right? Therefore, we take the location of registered person as the place of supply, and because we are also from Maharashtra and the go down is also in Maharashtra, and because the go down is in Maharashtra, they would also have a registration in Maharashtra, which means the location of registered person is Mumbai only, Maharashtra only, and therefore C plus SGST is applicable. Students normally think that because this is a service in relation to immovable property, which says where is property, that is place of supply. That thinking is incorrect. Let us say in this question, this is not Mumbai, and they are saying that the go down is in Kolkata. The go down is in Kolkata, and now we would simply assume that because the go down is in Kolkata, the person would have a registration there also in Kolkata, and therefore location of registered person Kolkata becomes the place of supply. It is not relation to go down, it is in relation to location of registered person, which automatically becomes the place of supply. So your general provision of section 12 will be applicable, and because we have a fixed place in Mumbai, we would be having a registration in Mumbai, and therefore place of supply is going to be Mumbai, and not because it is a service in relation to immovable property. You understand the rationale between this. We are applying the general rule to take the location of registered person to be the place of supply. Okay, so on this 80,000, C plus SGST is charged, which says that you have taken location of recipient and not the place of immovable property. After that, provided renting service of his service apartment in Mumbai at a daily rent of 1500 for residential purposes. Now again, reading the word residential purpose, you would assume that a residential property given for residential purpose is exempt under GST, therefore this should be exempt. But what is a service apartment? Service apartment is kind of a PG, kind of a hotel where you go, you stay and you get some services there. Okay, so this is a kind of PG. And a pure home, a residential property given for residential purposes exempt under GST. But hotels, guest house, inn, PG, they are all taxable. And service apartment, even though given for residential purpose in itself, is a commercial thing only. Therefore, it is going to be taxable. And now we will say that giving on rent a property is a service in relation to immovable property. Now, where is this service apartment? In Mumbai. So, the immovable property is in Mumbai, which is being rented out. Therefore, the place of supply is going to be Mumbai, Maharashtra, and therefore, it is going to be taxable under C plus SGST. So, 30,000 into 9,000 CGST and 9,000 SGST. Recovery agent services given to bank. Now, any person giving recovery agent services to a bank, RCM is applicable, which means no liability on us. The bank, the NBFC, the bank or the NBFC is going to pay tax under reverse charge mechanism. So, no liability on me. The NBFC will pay tax under reverse charge mechanism. Okay, advance received during the month for future intra-state supply. Now, total 9 lakh advance we have received, out of which the adjustments say that out of the advance received for future supply. 5 lakh is relating to goods and the rest is relating to service. So out of 9 lakh, we are saying that 5 lakh is for goods and 4 lakh is for service. Now according to the provisions of time of supply, we know that advances received for goods are not taxable because the time of supply is invoice, last date to invoice, whichever is earlier. So no GST applicable on advances for goods, but GST is applicable on advances for services, which means on this 5 lakh, no GST will be charged today in this month because this is advance for goods. But on this 4 lakh, yes, 18%, this being intrastate supply, 9 plus 9% GST only and only on advance of services will be applicable. So simply we've taken 4 lakh into 9% and 9%, but goods at the time of invoice only time of supply will come, and at that point of time only you will pay the GST. Got it. After that, then imported computer accessories from Korea and the goods landed in Mumbai port and reached his registered premises on 31st Jan 2023. So we've imported some goods. Now in the case of imports, along with custom duty, we pay GST and we also avail credit of the same. Now see, this is a pure ICAI assumption thing. In some questions they assume that the GST is yet to be paid on the goods imported. In some questions they particularly say only that we've already paid this amount as GST at the time of import. In some questions they are silent. Now see, if you see question number 37 and you see question number 38, they are almost 90% same only. All the adjustments are as such same. Now in question 38, they have very particularly said that the goods reached in the goods landed in December only and the taxes paid. So somewhere, if I'm not wrong, they have particularly written this thing, that the goods landed in Gujarat port and reached on 31st January, and this, see, the tax was paid in December only. So very particularly they say that the tax is paid in December. So while calculating the liabilities of January, we know that we only have to avail credit of the same because the goods reached in Jan. Therefore, credit will be available in Jan. But RCM tax is already paid. This is clear. The question itself is saying this thing. While in question number 37, they have not said anything whether the tax is paid or not paid, and in answer they have assumed that the GST is paid and they have only taken ITC of the same. However, if you pay RCM and then avail credit, you are also not wrong on your part, because there are other questions where we pay RCM and then take ITC for the imports if the question is silent. Here the question is silent. We don't know when the goods came. See, we know that the goods reached in our office on 31st January, which means we can take credit on 31st January. But when did the goods reach India? They've not said, right? So we don't know when did we pay the duties. We logically can assume that the goods came in Jan only. Therefore, we are paying the liability in Jan. We're taking the credit in Jan. But here, they are assuming this thing that the tax is already paid and therefore no RCM in answer they've taken, and straight away they have only taken credit of the same. So we've only taken credit, and see, somewhere they have written this point here, see, that we have assumed that GST has been already paid and therefore it is not taken while calculating the liability for January month. And see, the adjacent next question I showed you that they said that tax is paid in December, therefore they did not take into consideration. There are other questions where they are silent and they are paying also, they are taking credit also. So this is just a pure ICAI assumption. If the question is clear about whether tax is paid, not paid, you do the working accordingly. If the question is silent, I would advise you to write both the notes and solve your answer. Got it. After that, availed GTA services from Messrs Speed Trans of Kolkata with regard to transport of traded goods where the rate is 5% and they have not opted for FCM. This is very simple. If they have not opted for FCM, we will pay RCM and we will take ITC on 1 lakh. So we will simply take ITC on 1 lakh. No, this is not the GTA ITC. This is something else. Okay. So here we will pay the GST liability 1 lakh into 5% and we will also take credit on the same. So we will also take credit on the same. Perfect. After that, apart from above, 15 invoices involving IGST of 1 lakh during the current month. Okay, so here we have 15 invoices for IGST, out of which here they are saying, out of these 15 invoices, 12 ITCs involving ITC of 95,000 were uploaded by supplier in GSTR 1. All the invoices are eligible for ITC. See, total invoices are 15, credit of which is 1 lakh. But out of 1 lakh on the GSTR 1 on online portal, the suppliers have uploaded invoice only and only for 95,000. 5,000 invoices are not uploaded by suppliers in GSTR 1, which means credit is not reflected in GSTR 2B. And if the credit is not reflected in GSTR 2B, we are not eligible to claim that credit, which means even though the eligible credit is 1 lakh, I can only avail 95,000 because 5,000 is not furnished by supplier in 1, which means not reflecting in my 2B, which means I cannot claim it. So I will only take 95,000 credit and I will let my 5,000 credit lapse. Or maybe I will take it in later months when my supplier filed GSTR1. Okay, the turnover for preceding financial year is 21 lakh, which is greater than registration limit. Okay, then we say we availed services in an interstate transaction with a taxable value of 4 lakh and tax rate of 18%. Transaction was liable under RCM. Payment was not made till current month overdue for 180 days. Now see, understand, we have studied rule 37, which says that if from the invoice within 180 days, a recipient is not making payment to supplier, then as soon as the 180 days ends, the recipient is required to reverse the ITC along with interest if the ITC is utilized. But this provision is not applicable to 3 people: RCM, Schedule 1 and payment made to third person. Now they themselves are saying that this transaction was taxable under reverse charge mechanism. If this transaction initially was taxable under reverse charge mechanism, which means today, even if 180 days are expired and the payment is not made, no reversal will be required because this is a pure exception to rule 37. We have particularly studied it. So this point is given just to confuse you. It will not have any impact on your answer. He had sent goods valued 1 lakh to his job worker in the state of Kerala, who further processed and said goods and made supply directly from Kerala to a buyer in the state of Maharashtra. Now understand, if the goods are supplied directly from the premises of job worker, still the turnover is added in the turnover of principal only. Principal is from Maharashtra and the job worker supplied the goods directly to the buyer in Maharashtra only. Where is it? Yes, to the buyer in Maharashtra only. Now it is irrelevant that where the job worker is from. Job worker is from Kerala, doesn't make any difference. We will always see supplier and the place of supply. Place of supply is Maharashtra. Supplier being the principal is also in Maharashtra, which means on this 1 lakh worth of goods which are supplied directly from the premises of job worker, this will not form part of turnover of job worker. It will form part of my turnover only. So I will simply say 1 lakh into 9% into 9%. I am from Maharashtra, buyer from Maharashtra, which means C plus SGST will be charged. Got it. After that, advances adjustment we've done, and this is all done. Yes, so we calculated the outward payable, we calculated the ITC, we calculated the RCM. Now because we have made supplies which are taxable also, and we have made supplies which are taxable under reverse charge mechanism also, which means we will have to do reversals according to common credit. Rule 42. Rule 42 will apply here and reversal will be required. Now to calculate reversal, we need to calculate E and F. Okay, this is the outward supply. Schedule 1 will not be considered only, right? These laptops are normal taxable, so this will form part of total turnover. Stock counting service, normal taxable, will form part of my total turnover. Then this is also a normal taxable turnover, giving service apartments on rent. Then this recovery agent services provided to Apex Finance Limited NBFC. Recovery agent services, these are the services taxable under reverse charge mechanism, and anything that you supply taxable under reverse charge mechanism forms part of exempt turnover for the reversal purposes. So this 2 lakh. This 2 lakh will form part of my exempt turnover as well as my total turnover. Advances received for the month. Now see, advances be it of goods or services, time of supply only comes for services, but while calculating the reversal for input tax credit purpose, we always consider the full advance only. So the entire amount of 9 lakh will form part of my total turnover for reversal purposes particularly, even though GST liability is not required to be paid on the same. Correct. So my exempt supply is only 2 and my total supply is 6 plus 0.8 plus 0.3 plus 2 plus 9, which comes to 18.1. So let us just check the answer. Why have they given it 19.1 and our answer is coming as 18.1? Where did we miss 1 lakh? Okay, job work. Yes, this 1 lakh was given here. No, we've also supplied goods directly from job worker. Now they are also normally taxable. So 1 lakh goods supplied from job worker will also form part of my total turnover. So 19.1 is my total turnover and 2 lakh is my exempt turnover. So simply here see, yes, 2 lakh is my exempt turnover and 19 lakh 10,000 is my total turnover. And now we can simply do apportionment of common credit. Say yes or no everyone, very simple. Correct. Question 38, I have already provided this PDF to you all. It is just same. It is 95% same to question 37 only. A noted PDF is there. See, even the E and F turnover answer is also same here. 19.1 and 2. See, stock counting services we already understood. This import point I explained to you. GTA point we know. There out of 15 invoices, some were not uploaded here. Out of 20 invoices, some are not uploaded. Then machineries particularly we understand. Again, schedule 1 transaction only. They are saying that then we have this bill to ship to model, third person stock counting services. Then it was recovery agent services. Here it is direct selling agent services, RCM. Other than that, see, advances part is same, job worker part is same. So question 38 and this provision, this RCM provisions not falling under rule 37. This adjustment is also same. So if you have solved question 37, no need to solve 38. If you have solved 38, no need to solve 37. Basically, only the names and figures are changed, but the questions are similar only. Chalo. And now moving on to last question for the day, question number 39. KPI Limited, registered in the state of Himachal Pradesh, has a manufacturing unit at Baddi. The company manufactures two products, XT, ST. XT is taxable, ST is exempt from GST. Okay, again, something regarding to reversals would come because one is taxable and one is exempt. Following information is given. What are they asking? They are asking you to compute ITC that will come in the credit ledger. Out of this, how much is ineligible for the month of July? What is the common credit? And out of common credit, what is going to be? Okay, the total common credit and common credit particularly for 1 month they are asking. So it is all relating to ITC. The question is small and simple, not a full computation question. Chalo, one machine purchased on 1st July, manufacturing for XT and ST both, which means it is a common credit and common credit. Now, this are because everything is in relation to machine capital goods. We are going to solve it according to rule 43, input tax credit that we have. Input tax credit chapter rule 43 that we have studied. So this machine will be used for both. Now if something is used for both, for once we will take everything in the electronic credit ledger. So entire 72,000 I will take in my electronic credit ledger. Machine 2 purchased exclusively for XT. If something is exclusively for XT, then to anyways full ITC is available. So entire 36,000 I will take in my ITC ledger. Machine 3 is only and only for ST. Only for ST, which means it is going to only be used for exempt supply. Therefore, no ITC will be available for the same. No ITC will be available for the same. I will not take this only in my electronic credit ledger. Machine 4 was purchased on 1st October last year for being exclusively used for ST. ST is exempt. So last year I purchased a machine which I did not use for taxable. Only for exempt it was used. Which means at that point of time I would have not taken ITC. Today I am deciding to use this machine to manufacture XT also. Which means earlier this machine was only for exempt. But now this machine is going to be used for common transactions, common supplies, which means now I will take this 1,44,000. But ma'am, we do not take entire 144. We do 5% quarter reduction, yes. For once we take entire amount and then we reduce 5% for the quarters that we have used for exempt supply. Now that will fall under ineligible credit. First of all, I will take the full credit in this month only. So I take entire 144 and out of this 144, how much is ineligible? So we know that rule 43 says that whenever you are availing ITC, you have to reduce 5% per quarter. So we are saying that we purchased this machine 1st October last year, which means Jan, Feb, March, April, May, June, no. July, August, September, no. October, November, December. October, November, December quarter, then Jan, Feb, March, April, May, June. Because the usage is changing from 1st July, we have to take the date preceding to that. So 30 June will be the last date, which will be considered for the reversal quarters. So say October, November, December, Jan, Feb, March and April, May, June. For 3 quarters, 5% reduction will have to be done. So 144 into 5% into 3 quarters. So 2,16,000 will be reversed by us out of 1440. So 1440 I will full take in my credit ledger. So what full amount I will take in my credit ledger? 72 plus 36 plus 144. Out of this, how much is ineligible? So 216 is outright ineligible. See, understand, reversals are different. This 216 is outright ineligible only. Got it. Then machine 5 was purchased for exclusively taxable, but now it will be used for exempt also. So now my usage is changing from taxable to common, which means ITC was already availed earlier only, because earlier only I thought that I am going to use this machine for taxable, which means full ITC I would have availed at that point of time only. No need to avail the ITC again. This now becomes a part of common ITC, yes, but no need to avail the ITC again. And one more machine purchased 2 years ago is used for both only since that point of time only. So this is also a part of common credit. So first of all, what I will take in this month in my credit ledger, 72, 36 and 144. Out of this, how much is ineligible? 144 into 5% is into 3 quarters. Now they are asking us the total common credit. What is the total common credit? See, 72,000. This is only exclusively taxable. So this is not common credit. This is exclusively exempt, not common credit. 144 now becomes common. 18 now becomes common, and 108,000 was common only since 2 years. So till 60 months we do reversals, right? So 72, 144, 18 and 108,000. 72, 144, 18 and 108,000 is the total common credit. What will be the common credit for this particular month? Total divided by 60. So this comes to 342. The total common credit is 3,42,000. Divided by 60 you do, because the useful life of any capital goods in GST is 5 years only, which is equal to 60 months. So 3,42,000 divided by 60 comes to 5,700. So 5,700 is my common credit for the month of July. Now if the question gives you E and F, exempt and total turnover, you can simply do 5,700 into E by F and find out the reversal amount for this particular month. Done. This is all. Right from question 40 till question 51, we have already covered in part 2 of the Q&A video. So we have this question answer solving playlist on YouTube. The questions pertaining to ITC, you will find 4 videos. One video you will find where I have solved question number 1 to 30 straight. All 1 to 30 questions are solved. Similar pink thumbnail only you will find for the same. Correct. Then we have second video in which we have solved question number 40 till question number 51. Then this third video that we are referring, question 31 to question 39 are solved here. All these 3 videos are in 100% English. There is one more video for ITC, input tax credit question solving only, which has a grey thumbnail. Now that is an older video which I have not removed, because that video covers all the ICI study material questions covered in Hindi language. So this video I have not removed. It is an old video. If you are not comfortable in English, you can anytime go and refer to that grey thumbnail video for input tax credit only. Ma'am, where are these videos? See, I will just simply show you. It will just take 1 more minute. You go to the playlist section. You go to the playlist section of the channel, and we have this CMA final Q&A solving playlist. You go in this Q&A solving playlist and see. Here we have all the question solving videos. This is the grey thumbnail video that I am talking about. This is an ITC video only, but in Hindi. This is the old video where only ICI study material questions are solved. And after this we have this pink thumbnail video, which has entire full question bank, entire 51 questions. All the 51 questions of input tax credit solved in 3 parts. First part, question 1 to 30. Second part, question 40 to 51. And third part that we took today, which is question number 31 to 39. And this effectively covers all the ICAI study material, revision test paper, mock test paper and past paper questions till May 24 exams, along with all the relevant amendments that we have covered right here on YouTube. So even if you are my batch student, not my batch student, you can benefit from these videos. If yes, do not forget to hit the like button, drop a comment. So whenever a new student comes, they know they can rely on these videos, and YouTube also starts to recommend the videos. So do not forget to subscribe, like and share, and drop your feedbacks and comments. See you all in some other videos. Till then, take care and bye-bye everyone. If you have any doubt, you can simply connect with me with the Telegram group link that is given in the description of this video.